Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin. Well, it's Sunday, February 15th, and we're looking here at the S&P 500. It's generally where we always start. And you can see, hopefully you can see here that we've made, this is actually a new high. I had this line right here, this 2090.5. It was actually 2090.55, I think was the old high. And the S&P 500 closed above that old high. So what we're expecting to happen now is, what I'm expecting to happen is a move into this resistance area above 2125. That doesn't mean that it won't pull back, a little bit first, maybe back into this area and then up, or it could just go straight there. But sometimes once you break out above a new high, it might go a little higher and then pull back and then go up. So we'll just nobody knows exactly how that plays out. The MACD looks like, here, let me raise this up a little bit. Looks like it's curling up, so it could just continue up from this point. It was interesting last couple of weeks. I mean, it's always interesting to me how the market will pull down to these areas that you have on the chart before that you haven't advanced. Pull down to those areas and then bounce off of them. So if we look at the 10-year interest rate, the bond market has been selling off here recently, which means the interest rates have been rising. And these are pretty strong moves in the interest rate. And you can see here the MACD, or the RSI rather, is curling up. And this is likely to maybe you can see that last time. This is pretty typical. I've got a 30-day and a 20-day and a 50-day moving average on the chart. And you can see once it broke down through the, what is this? That's the 30-day moving average. It kind of drifted along in between the two moving averages, then broke the 50, bounced back up under the 50, then sold off again, retested the 50 again, and sold off again. So a lot of times once it starts doing that, it'll continue to do that. And so I would expect the interest rates to get up here into this 2.25, 2.3 area within the next couple of weeks, and then pull back. And this could be the pullback and the ending of the pullback we've been looking for. And if that's the case, we're going to see interest rates probably take out these old highs back in here somewhere to about 4.2 or higher. I mean, it just depends. I mean, this is definitely is going to take out this move, and likely it will take out, maybe even go higher around the 4.5 to 6 range. And that's going to be pretty traumatic for the stock market. So this continues to be an important chart, and we'll continue to talk about it. I'll show you the bond market here in a minute. It's just an inverse. So it looks like that. Okay, there's the bond. That's the interest market. That's what the bond market looks like. All I did was flip the chart so you could see the inverse of it. But we'll actually look at the ZB just to verify that. Let's look at the VIX, since we were just looking at the S&P 500. And what you'll see is the VIX sold off pretty heavily and actually has pierced this line that we had on the chart. Of course, it pierced it again back here. Again, that's interesting how these lines play an important role. You might see it if you look at what it did last time. It pierced it but didn't close above it, rallied up, and then closed below it. Excuse me, not above it, and then dropped below further, but closed back above it, and then closed below it again. So we might get a couple of weeks here as the market's pushing up to those new highs, where the VIX is, where you get some tails down here, but you don't really get a lot of closing bars. So just keep an eye on that. Certainly an interesting market there. The Germany, you can look at Germany. We'll look at the DAX here in a minute, but let's look at the EWG. Germany looks still strong. I mean, I would say as long as Germany is above this trend line, Germany is outperforming other European markets, and may prove to outperform the U.S. market if the U.S. market gets a new high, but then pulls back sharply because of this bond market issue. We'll just keep an eye on that. Japan, is in this trading range. Looks like it wants to break out now, though, and so if it does, what does that mean? What can we count on here? Well, typically, what you do is you look at the range of the trading range, so 12.25 down to about, let's just call it 10.75. So that's like a 1.5. So you could see the Japanese market come up here to about 13.5. So an area around something in this zone right here. Of course, it might. The other thing it could do, a lot of times what will happen is you get a breakout and then a pullback, and then it'll resume to the target. So I would kind of look for that to happen. But if Japan breaks out of this range, then the Japanese market's likely going higher. The United Kingdom, we've been talking about how we broke down through this channel here, and this channel is bound by this line and this line, and a lot of times if this is support, and we can go back and look, it looks like it's been support for a while. Once support has been broken, a lot of times then it becomes resistance. So you might see this market come up to this area and then recoil from this area. You have to really start once a market starts breaking support, you really have to pay attention. I mean, it could just be a pullback into this support area and then rocket higher, or you have to really pay attention when you start getting close to that trend line that acted as support, because it tends to be resistance going forward. The FXCM market, they were able to secure some money, but it still looked like it's struggling. This is the one where the Swiss Central Bank came out and changed interest rates and caught a bunch of traders off guard, and this company is pretty much on its way out of business. They did secure about $300 million, but who knows if that's going to be enough to stop the bleeding in that company. So we'll just have to wait and see. The Euro-US dollar. Sorry about the dogs. There's something going on in the other room there. The Euro-US dollar looks like it found support in our area here and wants to bounce. And of course, the US dollar pulled back. So these are, the US dollar again will do the inverse. US dollar looks like that. The euro looks like that. So we'll look at the dollar here. Let me flip over and pull the dollar up, and let's look at that. We had this. Whoops. Let me get out on a weekly chart here. So we had this zone here that I marked off of this previous pivot. So we've talked about this before, but what I do is I go back and look at these pivots, and then we kind of create a support or resistance area off a previous pivot. And we talked about it stopping in this area and taking a breather. And you can see that's pretty much what it's done here. It has stopped going up in this area, has pulled back, and it'll probably pull back. I don't know if you can see it. Let me zoom in a little bit. A lot of times these pullbacks, they look like this. So you'll probably get a pullback below this low. Okay, it's kind of a shakeout area. Once the market pulls below this previous pivot, a lot of people kind of the weak hands they talk about in the market get get uh, get driven out, and then you get sometimes this will actually go. It'll look like this. It'll look like a well. Let me see here. How do I want to do this? Let me do it like this. It'll start off looking like this, with a tail like this. But by the end of the day, it'll look something like this. It'll have a small box on top and a really long tail like this. So you could see a formation like this at the bottom of this move. And this is called a hammer. And generally speaking, what happens is these occur in these shakeout areas where weak hands sell out and the buyers come in and then drive it back up even to higher highs. So once we get a pullback like this, you might see a hammer like this, and then you see the market turn and go back up, break out of this resistance area into new highs. So I would look for something like that to happen in the U.S. dollar. Of course, that probably means lower lows for the euro. I don't know. There's a lot of stuff going on in the euro. I think the people are trying to get in front of this whole Greek situation, but it's hard to say how that's all going to play out. I don't think anybody really knows. Well, there's some people that know, but they're not sharing. So, switching to gold, we talked about last week how I had this channel drawn on here, these two green lines, and that we broke out of this downtrend, and that we were probably going to come back and test this area here, which it looks like we're doing. We're getting a pullback into this area here, and then you'll probably see gold resume higher. And I would say gold is probably going to be, it's probably going to come up into this area around 1500. Or maybe a slightly higher, but 1500 to 1600, and then pull back. It's probably not going to make new highs this time around. Rarely do you get a sell-off like we've had, and then it just immediately goes to new highs. So it'll be a larger version of the correction we just talked about. That looks like this. You get a deep pullback on that second pullback as you get a shakeout below the previous low. So this could be a larger version. This could take months and months for this to occur in gold. So, but I think you'll see it maybe even see it get above 1600, and then which would represent this area right here. Okay, and then you get this, which goes to even lower lows. So, there's all kinds of different forecasts for gold, but personally, I'm trying to wait and see if gold pulls back to about 700. If it does, I'm going to buy as much as I can. So that's what I see there in this market. Let me get out of this. Yeah, thought I was getting out of this. Well, bear with me just a second. There we go. Let's look at let's look at crude oil. Crude oil had this big slide. Well, I'm not even showing the whole thing. Had this big slide that started back in June, and went from looks like 107 all the way down as low as 43.66. So I'm looking for crude to push back up into this area here, and then roll over and actually make a lower low. So I think you'll see crude. This may chop its way up. This may take a while, chop its way up into this higher. It could get as high as $75, but then I think it's going to roll over and make a lower low, probably somewhere below, even below here, maybe around $30 or so. So we'll keep an eye on that and see what happens there, see how that progresses. If it does get down to about $30, I will personally look at buying the USO, which is the ETF for the oil contract. And here's the ZB. This is the 10-year Treasury bond, and you can see here we're pulling back. The interesting thing here, this is a pretty hard pullback. You can see here from the screen, pretty deep pullback here, but there's some strength on the indicator here. I don't know if you can see there's a little grayer upper line, and then the blue line is, the blue bars are kind of extending outside the gray line. That means there's strength here. So this could actually, this could just be a sharp pullback, in which case we're going to make one, maybe one more high. So that strength sometimes on this indicator, it takes a while. It doesn't just, anytime it's outside that gray band like that, like you can see it here. You can see here it got outside the gray band, and it kept going down, and it burst up, but then it came down and made a lower low. You can see this low right here is lower than this low. So you can see a situation like this where once you see a pullback, but the strength band is such that it's above the strength band, it could chop a little bit, and then you could actually see a slightly higher high in this market. So we might not be through going down. I know when we looked at the interest rates over here on the TNX, we looked at maybe this being the low, but you notice what's interesting is we still do have a support box right here below this low. So you could see this market go up a little bit more and then test this 1.6 area. In fact, I think that's pretty likely given the strength on the ZB. What else do we want to talk about? I mean, there's a lot of news in the market, so you're going to see probably, volatility in both directions. Something comes out about Greece, and Greece is not going to pay, and this kind of, Greece has already defaulted once. So, I'd say it's a high probability they're going to default again, especially since this new government has come in and basically told the people, yeah, we don't need to pay back anybody. That's the problem with a democracy is people want stuff basically for free, and there's just no such thing as a free lunch. Somebody's got to pay, or you got to take away those benefits, and they want their cake and eat it too, and we do too here in the U.S. So we're going to go through something similar at some point in our history. I don't know. At some point in our future, I don't know when that'll be, but there's a lot of people in this country that think that the Fed can just print money and the Congress can just spend money it doesn't have and not tax the population. If we were taxing everybody as much as we were spending, it would be everybody's taxes would be twice as high as they are, if not more. So it's clear that we're not going to be able to continue on the path that we're on either. And if you want to see kind of what the future of the U.S. is going to look like, you can watch some of the stuff that's happening in Greece, and that'll be happening here before long. It's inevitable. So that's, I guess, enough of the editorial for this week. I want to thank everybody for coming in and continuing to support the YouTube channel. If you would continue, to promote it to your friends, send a link, or your family members. I think, one of the reasons I keep saying that, even though there's not a lot going on in the market's kind of creeping higher, is at some point this is going to get real exciting, kind of like it did in 2008. And I think people just need to know, they need to understand, they need a good rule or a good way of stepping off the tracks, and I think that's very difficult for people if they really don't understand the way the markets work. So that's why I think it's important not to wait to share something like this with friends and family. We've talked a little bit about the psychology and how the market makes you think, when it starts to sell off, and I'm going to wait till it comes back, and then it doesn't come back, and then you talk yourself into hanging on a little longer, and then you lose another 20%, and then eventually you just go and you give up. At some point you give up, you just panic, and that's about the time that it stops and turns back and goes the other way. So there's just a strong psychology there at play, and if you don't know what to expect or you don't know how to manage it, it makes things very, very difficult. So anyway, that's it for the Middle Class Investor this week, guys. Thanks for coming in. Hope to see you next week, and we'll take care. You guys take care. Have a great week. Bye-bye.